Welcome to Bitcoin Escape Plan. I'm sure you've heard lots of people talking about how 2026 is going to be an explosive year for Bitcoin. I don't believe so, but that's what we're going to go over today is what are the realistic targets for later in this year based upon the assumption that the price is going to rise instead of drop. If you want to see my actual opinion, you can check out my 2026 Bitcoin price prediction video where I talk about how low I believe we're going to go this year. But just for the sake of argument, we're going to look at some of the key factors in the market that could tell us that it's actually going to rise and that everyone is going to be correct on the news for once instead of everyone being Jim Cramer. So, start off with, let's take a look at Bitcoin locally. What is it likely to do in the next 24 hours as a reward for anyone who's watching the video early? Like and subscribe so you're getting these videos right as they drop. So we have recovered early Sunday morning on the 4-hour SMA, which is a good sign. As you can see, we've been below since Wednesday of last week. So just consistently dropping, failed to react to it on Friday, and continue dropping. But again, good sign going into the week, and likely we're just going to retest the same movements from before. So I talked about this a bunch in both the newsletter and previous videos. This is the guy we actually are looking for. This is the anchored VWAP. The anchored VWAP is continuing to rise. This is the upper band. So we need to reclaim that upper band or we are not bullish. It's very simple, very simple. So in the short term, in the next day, we're going to want to continue to watch this reaction to the upper Bollinger Band, which is looking at right around 91.1K at the moment. As you can see, we already wicked to that and it failed it. Looks like we're retesting the 4-hour SMA. Assuming we hold strength at the 4-hour SMA, I would assume within the next day or two, we're going to make a run for 91.9. And then same thing, we just got to pay attention to a reaction there, whether we want to come down. If the 4-hour SMA is going to continue curving upward, though, then any bounce from here would probably come back to right around this level instead of needing to come back down here or even down here. But based on, we already had a couple breaks below and then held above it, held way above it. So I think for the moment, price is going to want to make another run towards this direction, and it may just get stopped out here or here before it gets there. We'll get into the longer term view of Bitcoin a little bit later in the video, but first I want to take a look at some of those signals in the market of whether or not Bitcoin is going to start ripping. But before we do that, go check out bitcoinescapeplan.com. You can see all of the recent articles that I've been posting. Some are free previews of the paid newsletter where I go into other topics like gold or SPY. I think I'm going to do real estate next. Stablecoins, I will be talking about that later. Ignore the fact that all the pictures are the same. That's all right. Go subscribe over at bitcoinescapeplan.com to get that information in your email. So the total Bitcoin spot ETF net inflows. This is super important for us to keep in mind whether we are bullish or bearish right now. So the last time we had significant buys was over here in October, which interestingly enough is right before the peak. As you know, is like middle to late October. It's a decent sell-off, but at the moment, since about October, we've had considerably more selling pressure than buying pressure, and we haven't seen, anything significant like over here in terms of total volume in a long time. I mostly just pay attention to IBIT. IBIT is the largest ETF by quite a margin. I forget where that is on this page. Yeah. So 2 billion in volume, market cap 70 billion. FBTC is the closest with 18.4 billion in market cap. But look at the volume. The volume is tiny in comparison, literally a tenth essentially. So IBIT is really the only one that I pay attention to. And the money's just not there at the moment to the upside. Like we have not seen enough buying to start breaking out of these levels. And again, this is money is flowing out of these ETFs, not into it. And I would imagine probably flowing into things like gold or things like the stock market, which, again, I just made a whole video about the analysis between gold and Bitcoin, likely over the next 4 years. Packed full of value. Go check that one out. If we take a look at the MVRV, which I don't know what the letters stand for, that's not important, but the market cap, realized cap, these are both steadily rising. The market cap, as we know, more and more money continues to stay in Bitcoin over time. There's not a ton of money flowing out of Bitcoin. Even though the ETFs, there's money flowing out, we would see like a sharp decline in Bitcoin in terms of the market cap and the realized cap. And the realized cap, as far as I remember, let's see what it says here, is takes price of Bitcoin when it last moved. So what that means is if the realized cap is, it's not showing me exact number, I guess that's 1.1 trillion, and the actual market cap is 2 trillion plus. It just means that about half of that money hasn't moved since the market cap was at that lower valuation. So there's still plenty of time before we see an actual cross. As you can see here, this is the actual bottom. This is when we see a cross of the market cap and realized cap, and the market cap is just continuing above that whole time period until it does drop. And as you can see, it goes for a really long time. This right here was the peak of the price, and then it's still above it for a while before it finally drops down to the realized cap. And that might be what we're looking for now, is more consolidation and then eventually a drop to that realized cap. Though again, you can see the trend. The trend is clearly bullish. This is the part that I think is really important though, and like both telling and also a little concerning if you take a look at this part of the chart. So for anyone who says that they believe that the price is going to go higher, that means that they would have to ignore that this trend has not rematerialized. So over here, the market cap is tiny. So we're not going to see spikes like this again in terms of the MVRV score, which is the difference between this and that price. This is going to continue to get harder to get a higher MVRV score over time. I believe that this typically indicates a time where Bitcoin is overvalued. So we're really not overvalued at all. So there's plenty of room to run in that respect, where price could get up to these levels, because it really didn't. But as you can see from these green touches, which this is COVID, this is the 2018, 2019 bear market, this is 2022 bear market, I believe, and most sane, logical people in crypto who are actually in crypto and not on the news for other shit, they're going to assume that we're headed towards this green band at some point this year, as opposed to headed back to this red band by the end of the year. So if you believe that the price is going to go up, and again, I'll talk about those levels a little bit later on in the video. If you believe the price is going to go up, that means that this trend would have to not dip lower, which is what it commonly does after it has a major run up. Now, again, this is 2017, this is 2021. As we can see, there is a dramatic shift in the volatility of the MVRV score, whereas now we really didn't see that. We see it kind of thinning out. In some ways, I think that this might be like Bitcoin dominance. Bitcoin dominance over time, I think, is going to get more and more boring. Between about 40 and 60% is just where it's going to live, instead of it making like major peaks above or below. So this is something that's really important for you to check out. And you can just type in MVRV score Bitcoin, and this is the one that I'm using at the moment, Bitcoin Magazine Pro. But that's if you do believe that the price is going to go way higher, you're going to want to pay attention to this, because we'll see an indication that it's broken above the 2 trend line rather than continuing to break down into it. So that one's super important. If we go over to Bitcoin one more time to take a look at the broader context of people who are talking about us getting a rise, what does that mean? What does that realistically mean that the price can go to? So if we're looking just basic Fibonacci pivots, then still the arguments of last year about 130, 128 is the pivot, 150 people talked about a lot, 147.9 is the pivot. Still very possible based on the chart itself. It's believing that there's a possibility, but as you can see, it's also broken to the downside. So that's kind of the range that we can assume is the price could go anywhere from $150 to $44,000 over the course of the next year, because this is the monthly time frame. So a period of 3 to 12 months essentially is what we can expect for any pivot that is far from where we are now. Whereas this one, obviously, within the next month, we can assume we're going to get confirmation of the 96K pivot, which I've talked about in a ton of other videos. There's a bunch of reasons why 96 is pivotal. I think base case analysis for January is just going to be whether or not we can break that, and that'll determine whether we fail lower going into February and then get another bounce, or if we are able to actually break that and make a rush higher. I've talked about it a million times. I don't think we're going past 106.8K. Not the point of the video, though. We're talking about the hopium. That's the point of this video. So the people who want you to believe that the price is about to rocket and that a ton of money is about to flow in the market, and the stable coins and all the money that's flowing in the strategic Bitcoin reserve, all the money that's going to flow into the market, those people want you to believe that it's going to head in this direction. So if we look briefly at a history of what happens when we touch this line, the orange line, which is the 20-week SMA, every single time we touch it, we break below it for an extended period of time. Every single time we touch it, we break below it for an extended period of time. Now, it doesn't happen right away. As you can see, this takes a couple months for it to actually decide. And as you can see, this takes a couple months for it to actually decide. So that is where we are right now. Again, sorry to give you a dose of reality in this hopium video, but that's where we are right now. Right now, we are in the period of a couple months where it is deciding whether it's going to reclaim the SMA, which has never happened before in history without a prolonged downside period, or if we are ready to give it up and start going lower. So I've already talked about the levels that I think are important for Bitcoin. So let's talk about some of the news factors that I think are tied to this. So this one is super important. So if you believe that a ton of money is going to flow into the market, specifically because of the US government buying large sums of Bitcoin, then this is a chart that you're going to want to pay attention to. This is the Polymarket betting odds for US National Bitcoin Reserve before 2027. So this started going live, I guess. Actually, does this show me the oldest? Yeah, this is the oldest. So this one has been up since about November. And what was happening on November 26th? Let's go take a look real quick and see what we can see. So we were at relative lows, coming up from the relative lows at that time. So there's kind of two things that I think about when I look at something like this. So the betting odds have been really bad for it since, which means that somebody who is really, really highly convicted or connected could be buying these for very cheap and end up getting, for 25 cents, it could get paid $1 if we actually see this National Reserve before 2027. If I'm to take it at face value of why this rose during that time, the main reason that would occur to me is because we're so close to a bottom. So the thinking is that if the U.S. is going to buy a lot of Bitcoin, it would prefer to do it at a cheaper price, right? Like they would get more Bitcoin for that price. That's the only logic I can apply to why there's a spike there, other than just it's only been trading, at that point, it had only been trading for about 20 days. And there was a significant move in the market right here that caused it to break from about the 40-50% to higher, and then obviously lower. But at the moment, the market is pricing in that they do not believe that there is going to be a strategic Bitcoin reserve by 2027. The Stablecoins Act, this is the main point of there actually being liquidity. I know a lot of people are talking about quantitative easing has already started, and there's up to $40 billion a month is going to be printed. $40 billion, Obviously, I don't have $40 billion, but $40 billion is not that much money in the grand scheme. And if you think about it in terms of the percentage of that that's going to actually flow into Bitcoin, you're talking about a fraction of a percent, maybe 1%. Like a very tiny amount of money is going to flow into an asset that, again, is over $1 trillion in value, 1.5 trillion plus dollars in value at the moment. So there's not really any reason to assume that it's magically going to pump the price. The stablecoins themselves, a lot of people have been talking about those as like the pivotal point for all of this. I made a full video about that. You can go check that out. The law was signed in July of 2025. It won't take place until January 18th of 2027. So there's a possibility that they can push it through a little bit earlier, and we would see that momentum in July of this year. And they are, as of early 2026, the U.S. Treasury Department is finalizing regulations following industry engagement, signaling that full implementation is targeted for 2026. So they're going to try and get it done before this January 2027 date. They have to be finalized by July. But me personally, I think that this is going to take longer than we think it's going to. And you can just go look at what I just said for the Polymarket betting odds on the Strategic Bitcoin Reserve. To me, those two are linked. The amount of stablecoins that suddenly flow into the market, that increases the amount of government debt that needs to be bought. The more government debt that the government is selling, the more income that they're going to receive from that. And therefore, they'll be able to buy more Bitcoin or leverage other assets in order to buy more Bitcoin. So really, until this goes into full effect, whether that is closer to July of this year or, again, the actual when it's supposed to take effect in mass, which is January of 2027, my baseline assumption is still that we're going to see price fail around here and price bottom by around here by the 2027 date. If we're to take the 2018 into 2019 bear market as face value of what's going to happen, who was the president then? That was Trump at the time. So we would have to ignore these and just assume that they magically go in effect before July for some reason, before they're actually finalized, which sure. Like, I don't know if I believe that that's going to take place. And then the money would have to flow in all at once. It would not over a period of time. It would have to flow in all at once in order for us, again, to see these like massive targets up here. We would need the stablecoins to go live by, where's July? So July is over here. So we would need that. They would be finalized between this period of time, and then they would need to all print at the same time. And all of those people would have to decide to put the money into Bitcoin itself in order to see those levels. Which, again, I don't see. If they're about to print trillions of dollars in stablecoins, what's going to make more sense for the value of those stablecoins, again, is if the price is lower. Because then they've printed trillions of dollars and they can put it in an asset that's going to go up. As opposed to, if the price runs to here, why would you want to print $1 trillion to put into it? When all likelihood is that it's going to need to drop back from that. There's no pivot point higher than that. There isn't one. I can talk briefly about the targets that we had talked about for last year, which was my conservative estimates for 2025 were 130 to 150. We went slightly below that, but I'm pretty happy with that. I said that in 2022, so fairly accurate. And then higher than that would be 180 to 210, but I don't think we see 180 to 210 until the next cycle now. I think that is, categorically out of play at the moment. There's a possibility that we see 130, but that's honestly the highest I could believe, and that would be breaking all precedent. We've never seen that before, and to the credit of the Strategic Bitcoin Reserve again, we're just not seeing that based on the behavior of the U.S., so this is a couple years ago. Actually, shit, hold on, sorry. Oh my God. Can't just scroll properly. So October 25, U.S. authorities seize about $15 billion worth of Bitcoin that was hacked. I forget if it was Bitfinex or if this is just an extension of this. But basically, they ended up becoming in possession of coins that were hacked from, I want to say it was Chinese citizens, because I don't think that China was very happy about this. Yeah, China accuses U.S. of stealing all of that Bitcoin. So essentially what happened is customers of exchanges got hacked, and then somehow the hacked funds didn't go back to the customers, they went to the US government. So if I'm the US government, why am I going to buy Bitcoin when I can simply find a reason to steal it? Like we're seeing right now with Venezuela. That's a big part of what's happening. They're going for the oil. If you listen to the Trump press release, that's all he's talking about is the oil. He doesn't explicitly mention the Bitcoin, but this is a very real thing that like I talk about this briefly in my short ebook about how there will be Bitcoin wars. We're already seeing that. That's already occurring now, where governments will find clever ways to take Bitcoin, not to buy it, to take it. So a dramatic increase to the upside happens when more volume and value is being added to it, not when it's just being taken. When it's just being taken, nothing happens. It stays flat, or worse, it sells off because people lose faith in the asset. So we're just not seeing this is not a bullish sign for the strategic Bitcoin reserve. Why would they need to go buy a bunch of money for the strategic Bitcoin reserve if they can just steal it instead? This is worth even more than the 15 billion that they stole from the Chinese exchange. 60 to 70, 67 billion. Of course, that's if they take all of it. And according to this, Venezuela only holding about 240. Much larger stems from intelligence reports. So there's some discrepancy about how much of this is actually true, like whether or not it actually is this amount or considerably less than that. But the point is, this is not the U.S. devising strategies to increase the income so that they can buy more Bitcoin legally. This is them finding ways to make somebody else a criminal and to take it, which again, to me, does not indicate that we're about to see a ton of buying pressure for Bitcoin, at least from a government side, which is that's that primary narrative. So I just think people need to take into account that that's why the Polymarket odds are so bad for the strategic Bitcoin reserve, is because shit like this is happening. Why would they buy it if they can just steal it instead? So now we're going to take a look at total 2, because this is actually good. I would say this is actually a good sign. And this is I would say this is one of the best possible chances that we see a continued upside move for Bitcoin if there's a slight decoupling between Bitcoin itself and the altcoin market. This is total 2, excluding Bitcoin, and I believe excluding stablecoins, though I may not be correct. That might be total 3. Again, such a professional. Like and subscribe if you're enjoying these videos. So this is 2021. As you can see, pretty similar to Bitcoin. We have an early peak, and then we have a later peak, and then it drops off a cliff, and the value goes down for all of 2022, and really most of 2023. The altcoins take a lot longer than Bitcoin to recover, typically. And again, same thing, we don't have a precedent of breaking down below the 20-week SMA and then recovering right away. Really, for the altcoins, it takes a lot longer. So that would be our baseline assumption, is that this is going to fail at some point in the next couple months. And this one, it did not take multiple months. This one, it did really just 1 month to properly break below. So we're holding on to it for dear life. But something kind of interesting is happening, I would say, with the altcoin market, where we're starting to see some utility stick around in a way that may actually end up propping up Bitcoin. So if Bitcoin is typically the leader and then that money flows into altcoins, if that flips and now money actually is flowing into altcoins first and then it's going back to Bitcoin, we'll see value from Bitcoin has been flooding out initially. So there's a possibility that starts to flow to alts, which let's see, this is January, December. We don't really see evidence of that. There's a slight uptick here, but it's still, we see the same outflow during that time period. So there's not enough evidence to show us that, okay, now altcoins are magically going to pump higher. That's just not what the chart is saying at the moment. But one thing that I think is interesting is for DeFi Llama, this is total value locked in DeFi. This actually looks very healthy. And as you can see, so DeFi didn't really exist at a meaningful scale until end of 2020, 2021. That's the first time it exists in a meaningful scale instead of, less than $1 billion until early 2020, essentially in total value, which is pretty small relative to even crypto market cap at this time should have been in the multiple trillions. So for that small amount of a market cap in DeFi is very low, not really worth paying that much attention to. So obviously it runs up in 2021, and we have a major consolidation period. This is the same as the total 2 chart. 2022 and 2023 is a period where money is flowing out of altcoins and out of DeFi. But then as you can see, this is pretty healthy since then, kind of decoupled from what's happening with Bitcoin. I mean, obviously that's the March 2024 initial peak, and then Bitcoin consolidates for the rest of the year before it goes lower. But you can see DeFi actually has another pump later in that year. So people are finding more uses for it over time. So this, I think, oh wow, I went way too far down. The two that I want to pay attention to most are Aave and Uniswap. And those are, I'm going to go over those charts for a little bit before we dive back into Bitcoin for the end of the video. Like and subscribe. So for Aave is the largest amount of value in the market by far. Way more money is in Aave than in anything else other than Lido. And people are starting to use EigenCloud. A lot of people like Binance as well. But most of it is centered around layer 2 solutions for Ethereum. Aave is a decentralized finance lender and borrower, essentially. You can put up certain assets and receive yield on them, and then you can borrow other assets. It is really fascinating. I don't think DeFi is worth it unless you have a lot of money. If you have a lot of money, cool, then go use DeFi. But if you're someone who has less than $5,000 or $10,000 in Bitcoin, you're wasting your time with DeFi. And even then, you're still poor. I'm sorry to burst your bubble. But if we're looking at like how much are they actually making, and that like this, Kevin O'Leary is the one who first put me onto this. Not that I know Kevin O'Leary personally, or no, what's his name? Mark Cuban. Mark Cuban is the one that I heard say this in like some interview. This website is great for actually like getting not delusional about how much money is actually flowing into the market. So this is the fees that are earned by the Ethereum network in the course of a day. Average is slightly higher, so today's a little lower. This is for Bitcoin. So as you can see, for those two, that's a decent amount of money. $5 million in fees just like passively every day just by the market running. And same thing for Bitcoin, like more than $2 million in fees just passively flowing because of the market moving. Uniswap and Aave are those two that are actually making a lot of money. And Uniswap is actually making a lot more money relative to the amount of value that's in it. Uniswap is only a little bit more than $4 billion in value, and that's generating $1.5 million in fees, versus Aave is, again, more than $34 billion. It's what's generating those fees. So the fees are considerably lower for Aave. Uniswap also does something different. Uniswap is just an exchange, whereas Aave, again, it's borrowing and lending primarily. And then Uniswap, you can participate in the liquidity pool, which is basically you're just like giving extra money to one side of the trade. But really below those, there's nothing. All of these are way smaller in comparison. And I know that still sounds like a lot of money, but you've got to take it in context of the total amount of money that's in the market. Total crypto market cap is more than $2 trillion. Is $348,000 really that much? No, it's not. It's tiny. Anyone on here who loves Cardano, look at how many fees that Cardano is actually making. And now you might take the flip side and say, oh yeah, but it's so cheap. It's so cheap. It's really good. But the network itself is not making any money. It's not making any money, for most of these asset classes. So the only two that are actually worth looking at, in my opinion, are Uniswap and Aave. The general trend, again, for DeFi is healthy. That looks great. That doesn't look like we're in a bear market, That does, a sheer cliff, but we don't see a sheer cliff. We see a correction, but we saw a correction here. We saw a correction here. This chart is not going to be the same as this, over time. This is Bitcoin. I think that they're going to become less and less correlated over time, and that we're going to see more and more money flow into both the stable coins that will be tracked by this as well once they're on chain. And then total value in DeFi will also shoot up by quite a bit as that happens. So what we're seeing, I think, is a bleeding out temporarily before money does flow to altcoins. I just don't think it's going to be very predictable where the money goes. And this is why. This is Aave. So again, this is more money is locked here than anything other than Lido. But Lido is essentially the actual asset, I believe, is like not quite a stable coin, but it doesn't really move. Like there's no point in holding it unless you're actually utilizing it. But Aave had a run last year. It made a rush at new highs. It didn't get them, but it made an attempt at new highs. Again, this is the only other asset on that list that I just showed you besides Bitcoin, Ethereum, and Uniswap that is earning more than $1 million a day in fees passively for the network. The only one. Everything else is way, way less value, So if even this had some highs, but mostly happened at the end of 2024. And I think a lot of people just don't want to admit that end of 2024 was actually the altcoin run, and most of them just did nothing. Even this, again, Aave is the most used DeFi protocol that there is. It got one more attempt over the summer, and it's been failing ever since. And same as every other asset, it's usually not good for an asset once it has broken the 20-week SMA. What about Uniswap? Uniswap, even worse. Same thing. It got an end of 2024 run and never came back. It never had even close to those highs. Again, these are the only two assets that are actively generating a decent amount of money in the market as the general trend of money is flowing more towards these assets. More money is flowing into them, but it's like the only two that are generating any money are not benefiting from that. So even though there's money flowing in here, where's it going? It's not going to projects that actually make any sense. It's probably going into primarily memes, and just not really, you're not going to establish value in the market that sticks around if that money is floating around, if half of this market cap is memes instead of things that actually do shit. We're not going to see a meteoric rise for Bitcoin until we're able to reclaim these levels and go higher for total 2. And even then, it's just going to be, I think, a kind of like a byproduct of way more money flowing into total 2 will eventually push more money back into Bitcoin and vice versa. But I think that this may be the first time where we're actually seeing kind of a decoupling of that, where Bitcoin has done most of its run and is going to have outflows over the course of the year before the stable coins come and start pumping back in. that this is my base case. Again, just to play devil's advocate, we can ignore all of the signs that I just laid out. You can ignore that most other signals are bearish or in consolidation periods and just assume we're going to rock it up here. I don't know where that money is coming from. Like talk to your neighbors, talk to most people. Most people don't have a ton of extra money in savings right now. And the fact that they're going to do quantitative easing in the first place typically is an indication that the markets are weak, not that they're strong. They don't print money when the markets are strong. They print money when the markets are weak and they need stimulus. That's the point. So I think Bitcoin is going to get hit harder than stock market and real estate and gold because it's the new kid on the block. It's easier to punch around, like I think again, this is another one I talked about in the book. I think that there's a real specific reason why Bitcoin is where it is on this market cap chart, because Amazon, Microsoft, Apple, and Google do not want to give up these positions without a fight. Bitcoin was never going to rise past them this cycle. I really think that it's going to be next cycle where we actually see Bitcoin can get above some of these companies. And it's going to be, for the next 10 years, it's really not a guarantee, I think, that it gets past NVIDIA. NVIDIA might continue to rise past it over that time period. I already talked about gold in another video, but this is something that I think is going to be very important for us to pay attention to, is how much money is continuing to flow into these assets that barely move. Amazon barely moves, Google barely moves. As long as money is flowing there instead of here, that means we're in a risk-off environment. That means that people want something boring and reliable like gold instead of Bitcoin. So if we're just looking at it at face value and we just want to ignore, again, all of the signs that I just said, there's no chance in hell price is going above around here by the end of the year. Do I believe that's going to happen? No. No, I don't. My base case is this, is 96K. We're going to find out within the next month or two if that is actually the point that we're able to rise above. This is a really important point on the anchored volume profile. This is all the volume for the price of Bitcoin, where people are buying and selling in the most volume. That's right at that level. That's why that Fibonacci pivot exists, is because of all of that volume right there on the chart. The point of control has moved lower, which means buyers and sellers have started to step in volume where we were at the bottom of December and going into early January. But we're thin up here where we would need to fill that out if we're going to have a sincere move higher. And I don't think it's going to happen. I don't see where that money magically comes from until the stable coins have arrived, because the stable coins, now I'm JP Morgan Chase and I got all my customers. All I have to do is give them some promotion where they can earn extra stable coins by, depositing a certain amount of money into them or whatever. That's what they'll do, is they'll do some type of promotional thing when it makes sense for them to print all the dollars, and then a percentage of those dollars will go back into Bitcoin. But until that volume arrives, which again, as I said earlier in the video, probably no earlier than July, and more realistically, not until January, unless the government magically gets their shit together, which I don't know if you remember, but they shut down for like a month and a half, like 2 months last year. I wouldn't exactly describe this government at the moment as the government of having their shit together. It's just like not the case. So again, you have to believe that magically that money starts to flow in, and that we can break above 96 comfortably, which I can believe. I'm not here saying that we're not going to get above 96. I just do think it's going to be a really important level to watch. I do, however, still believe we're not going to get above 106.8. I just don't think so. And if it is, it's going to be for a day, and then we're going to fail. That's my base case for what I think is going to happen. So if that were to go the opposite direction, where that would, basically, to go back to the bullish scenario, which I barely talked about in this video. I told you I wanted to do the bullish scenario, and all I could do is tell you evidence of why that's fucking delusional. So what we would need to do is we need to see strength going into February above 96K. We would then need to spend all of February through April filling out 99 to 100, and that would give us permission to make a sincere push above 106, 107. If we just jumped right to 106, 107 right away after breaking 96, we're not staying there. We're going to lose it. We've got to fill out that range in the anchored volume profile before price is actually going to be able to comfortably sit at this level and higher. It's not going to happen until we fill out those levels. So we would need a ton of money coming from you and your neighbors to be buying Bitcoin at those levels while gold is still at all-time highs, while stocks and real estate are still at all-time highs. There's no reason to take money out of those assets into an asset that looks like this. It just doesn't look as good as gold and SPY right now. Why would you leave this chart for Bitcoin? Why would you leave this chart for Bitcoin? It just doesn't make sense, dude. Like, I know you don't want to hear that, but that is reality. Is it doesn't make sense to do that. So we're more likely to continue to consolidate and then probably chop downward when we fail key levels like 96 or 106.7. So the only possible way otherwise is if stocks and real estate and gold all start to, bleed in the opposite direction. And for whatever reason, all of that money only flows to Bitcoin. That's the only thing that would allow us to actually have enough volume to move back into these regions, is if there's significant outflows from all of those other asset classes into Bitcoin. But you're not seeing it in the ETFs, and the ETFs is most of the volume. You're not seeing it in the behavior of the U.S. government, where they're not buying it, they're seizing it, and you're not really seeing it in the behavior of the altcoins, even though they are, Aave and Uniswap are doing exactly what they're supposed to. The meme coins are doing exactly what they're supposed to. They're rinsing value from people who don't know what the hell they're doing in the market. That's what they're doing. Polymarket and the prediction markets are doing the same thing. They're rinsing value from people who don't know what they're doing in the market. None of that value is going back to Bitcoin. Like, we're not in a season where that value is going back to Bitcoin, and we're going to have to accept that. I'll take one more chart to end the video, the Bitcoin dominance chart. Bitcoin dominance looks like it is finally ready to capitulate and start to go downward, which again confirms our theory that money is about to start to flow into altcoins. But is it going to be significant enough money for another sincere push at all-time highs? Or are we just going to repeat the same all-time highs as then? We got slightly higher, but then gave it up. We don't have enough value or data for Total 2 and altcoins specifically, because again, they barely exist before 2027 or 2017 rather. So we pretty much have one full cycle, two-ish cycles to go off of, to see precedence. And this looks more like IBIT than it does anything else. That's what IBIT looks like. Yeah, that's almost identical. That's crazy. This is a little bit less steep than IBIT. But IBIT is just the ETF for Bitcoin. So more and more money is flowing into that over time, and it will continue to flow into it over time. But we're probably going to see a consolidation just above where these early buyers were. This is the earliest buyers. I don't think we'll ever go back down there again, which that would correlate to, I forget the exact Bitcoin price at that time. It would have been right over here. So about $40,000. So there's a possibility, like I've talked about in the 2026 price prediction video, that we do go as low there, but I think it's more likely somewhere in here, 50 to that, because that way all of BlackRock's best buddies, they're still in profit. Anyone who bought over here, or if they somehow got in early, which I don't even know if you can do with ETFs, but basically anyone who bought before this candle is going to be chilling, and then obviously some people rebought there as well. But that would be around a 40K Bitcoin. So it's more likely that it just kind of taps that value, if anything, so that these people could re-up if they want to. And anyone over here is either going to panic sell or is going to force themselves to re-up at that time. But regardless, the flows of the money, it's just like it's looking stair-steppy instead of parabolic. It doesn't look parabolic anymore. Gold looks parabolic. Like that looks parabolic. I've talked about that in the gold video. I think gold is going to run for the next 4 years probably, and I think that will have in short-term negative repercussions for Bitcoin. And then in 2030, it's going to be very interesting what that means for Bitcoin. But I think I've rambled enough on this video. I really wanted to try and create a bullish case for the price going higher. I don't see it based on all of the news stories. The only thing I would say that could do it is if the stablecoin acts go live like way early, like say for whatever reason, instead of them finalizing it in July, say they finalize it by March or April and they start pumping hard over the summer. I would assume Bitcoin will have already failed by that point, and then maybe it just goes down to the top of this level and then it recovers. Possibility of that, not my base case, but there's a possibility of that where we break to here and then that's actually enough, and we see it closer to this movement. Though again, that didn't break. It broke on the weekly SMA. It did not break on the monthly. On the monthly, anytime it breaks for a long time. That's just what happens. That still has to be our base case. We can't just throw that out as our baseline assumption. Doesn't make any sense. It's not how you keep your money. It's how you lose your money. So I'll do tomorrow's newsletter where I do more short-term targets for Bitcoin and what can we be expecting for price. But this has been kind of like my broad analysis of can Bitcoin actually go higher? Kind of what are the factors that would allow it to go higher? And I just don't think that there are that many of them. Sorry to burst your bubble. Like and subscribe. Thank you so much for all the feedback you guys have been giving me. Hope you enjoyed this ramble. I'll see you in the next one.